If you're thinking about buying a home in Tyler, Texas, you have to know this first. So we're going to get into the process of buying a home, what it looks like, the timelines, what's going to be required of you, and just overall the entirety of the process so you have an understanding of what it looks like from identifying a home to moving into that home and just everything in between, so you're better prepared to know what to look for, how long it's going to take, how much money you're going to need up front, and that kind of thing. So stay tuned as we get into it. So as you may know, the very first step in purchasing a home is going to be getting that pre-approval in place. That way you know what the banks are going to qualify you for in terms of what you can afford and that sort of thing. What the pre-approval does is it lets you see kind of the range of homes that you're going to be able to get into. In addition to that, I always encourage you also to give your lender an example of a home, and they can plug in the numbers and give you a monthly payment as well, because that's going to be really the biggest factor in figuring out what you can truly and comfortably afford. So getting that first level done with the pre-approval and kind of knowing how it's going to fit into your monthly budget is very, very critical in being able to determine what you're going to be able to purchase when you get to East Texas. So the next part that you're going to want to do is you're going to want to start identifying an area and a budget. So once we've got the pre-approval, you kind of know what you could be approved to, but maybe that number doesn't fit in your budget, so you actually work down below the pre-approval amount. But then also identifying an area. That's going to help you kind of center in and hone in on those places that as the listings come up, you're more aware of how that market's moving and things like that. So being able to identify that particular area is going to be very critical in identifying your home faster and being able to, maybe beat the rush as rates improve and the spring market starts to heat back up. So once you've kind of done those things and you've kind of identified an area, and this may even happen a little bit earlier than either of those processes, but for me, it usually probably needs to be that second or third step, and that's to look at homes. This is obviously the fun part where you're getting out into these areas, you're looking at different homes, you're seeing what your money will get you in those places, and just really kind of giving you the options that are available. One of the things that I encourage people is I would never recommend that you see maybe over 6 or 7 homes in a day, because truthfully, it is very tiring. Second, it also can kind of cause things to run together because the amount of time between, the similarity in a lot of the homes, truthfully, it will make it harder for you to kind of understand what you do and don't like. So if you're planning a day, I would recommend, that you don't see more than 6 or 7, just because you're going to see so many that it's going to make it kind of hard to differentiate in what you do and don't like. So the fun part is once you have identified the house that you want and you want to put in an offer, what I will do on my side is look at that neighborhood, determine the comps, and kind of give us a good asking price to go into the seller and hopefully execute the contract. Now, what I'm looking at for comps are basically to determine how much the house is worth as it sits. This is an inexact science. I'm not an appraiser, but what I can do is I can take similar type homes, see what they've sold for, and then try and apply it to this particular house and give it some value. One of the ways that we do that, there's no major differences or upgrades or things like that. We can use price per square foot and just take that number and apply it to the size of the current home. We use that and kind of determine a value. Now, in a multiple offer situation, sometimes that's not always the thing that you have to do. You kind of have to look at what's possible, in terms of what you feel comfortable walking away from the home at. It's listed for $350. We think it may appraise up to $365. What I tell my clients in that window is from $350 to $365. I would just suggest you offer whatever amount you feel comfortable with, or looking at it a different way, if it went for this number and you walked away, would you be okay with that? So let's say it was $360 and you wanted to only pay $357. Would you be disappointed that you didn't pay that extra $3,000? If so, then maybe we should go to that $360 number. Where's that threshold that you just don't feel like the house is worth it? Is kind of how we approach that. But in a normal situation, kind of moving back to a traditional balanced market that we're in, what I would recommend is when we know what it's worth, we look at it compared to the asking price. If they are the same, we try to come in under. I would say within 5 to 8% is pretty okay. Once you get to 10%, at these higher prices, you're talking $30,000 to $40,000. Most sellers are not going to want to entertain those offers. So because of that, it can be a slower process to start in the conversation. We kind of know where we would want to end up, and then we start below that, and try and work as close to that lower number as we can. So once we've started that process, we've sent the number, we've agreed on a price, we're under contract. So now the deadline has started to get, from the beginning of the contract to close and get you into that new home. There's a couple things up front that you have to know. Once the contract is executed, there are two forms of payment that are due to the title company, called your option money and your earnest money. So the option money is basically money that you pay for the due diligence period to get your inspections, verify as much information as you can about the home, because if after that point you're no longer going to be able to terminate and walk away as easily as you can under the option provision. So that $100, $200 that we put into there is a non-refundable amount, but if you do close, it will be credited to your closing cost at the end. So it's not a lost money unless you terminate. The second number is your earnest money. That earnest money is basically your good faith effort deposit on the house to show the seller that you are serious about buying it. Usually in our market, we do about 1%, but that is a very negotiable number to make sure that they believe that you're serious about purchasing and moving forward on the home. So that earnest money will also be applied to your down payment and your cash to close at the end of the purchase. So from that point, the first window in time, like we were talking about, is that option period. It's the option to terminate. Basically, you can cancel the contract for any reason. You don't like the color of the floors, the walls, you hate the neighbor, it has too many repairs, whatever it is, whatever reason, within that window of time, you are able to cancel the contract and step back and get your earnest money refunded to you. Beyond that point, we have to employ different provisions that would allow you to still keep your earnest money, but really that's the most important timeline in the contract. Is once we get past that, there may be a few other hurdles and whatnot, but those are typically more easy to resolve. So that first window of time, usually 5 to 10 days is what we operate with in our market, but that's kind of a very critical window of time. So once the option period passes, we've negotiated repairs, we've got it situated, you know what you need to know about the house. We will then move into the process where it begins underwriting with the lender, and all that process is going on. So in that phase with the lender, they're going to start looking at your financials, your work history, everything in greater detail, and kind of understanding your ability to purchase the property. Additionally, while that stuff is happening there, the title company has also begun their work on making sure there are no existing liens, there's nothing outstanding with the property that has to be taken care of before you can move into it. And that way they can pass clear title to you to where there's nothing against it, and it's yours free and clear essentially. So those two things are happening concurrently. One of the other areas that we can talk about, let's say you have a home to sell before you can buy. You're going to need the money from the sale of your home to be able to purchase this new home. So we have a form called for sale of other property addendum. Basically, that says that in the event that you do not sell your other house, you do not have to buy this current house. And basically, in the event your house doesn't sell, that earnest money is then refunded to you and you're able to walk away from the contract, basically lost time and your option money. But it's a very important addendum. If you do need to sell your house to be able to purchase, it provides you that protection, provides you your earnest money, and allows you to, kind of securely have this going to sell your house, but still be protected here to purchase the new one. There's another provision in there that basically what this addendum does is it gives you first right of refusal to purchase the house. Let's say somebody else comes in that's not contingent. Well, because you already put the contract in first or they accepted your offer, you basically have the right to waive that contingency if you want. Now, that is very risky because in the event that you don't sell your house and you're missing these proceeds, you're still obligated to close on this new house. So that could create some problems in figuring out what to do next. In certain situations, if it's your dream house and you want to just figure this part out, or you have the means to figure out how to purchase and deal with the sale of your home after, then it's a viable solution. It basically protects your right to purchase the home first if your home doesn't sell, you're still protected and you get your earnest money back. So that's another portion of the contract that's critical if you're trying to buy a home in Tyler and still sell another home somewhere else. So when everybody's moving along on the lender side, on the title work side, there's other things that will be required. If you are using a lender, they typically will require a survey. Those will take 10 to 14 days. In the slow season, sometimes it can be up to 3 weeks. So it is critical usually after the option period, if we need a survey, that we go ahead and get that ball rolling and get on the calendar to make sure they get out there. And basically the reason you order a survey is just to ensure that the boundary lines are correct, that the house is not sitting over the line, or there's not a fence, or there's not an encumbrance from another home, or things like that. It just basically gives you a very good sense of your property and where everything sits on the property. Usually also after the option period, the lender will order the appraisal. Now the appraisal obviously is very important because it's going to tell you what your house is worth. And that matters to the bank because they're not going to give you more money than the house is worth. Simply because it creates a greater risk on their end. So if we get an appraisal done for a house that we have under contract for $350, it comes in at $375. You don't pay that difference. You don't have to pay that $25,000 difference. You just got extra equity by being able to negotiate a good price. What that means is you bought that home for $350 that's actually worth $375, which is ideal. The downside can be, it's say we're under contract for $350 and the appraisal comes in at $330. Now what we have to figure out is, why did it come in at $330? Is it smaller than was advertised? So do we then take that price per square foot and apply it to the smaller square footage? Did they just overprice it and we didn't use comps correctly to get a good price? How you resolve this situation is usually through secondary negotiations. Is the seller willing to cover that difference? Are they willing to drop it to the appraised price? If not, sometimes the buyer then has to come out of pocket. We have an addendum as well that is for an appraisal addendum that basically, if it does not appraise at the contract amount, the buyer can then walk away and keep their earnest money. So that's another protection for the buyer to ensure that they're not overpaying for a house. Now, if you're doing a VA, USDA, or FHA loan, these are all government-backed loans, you automatically have an appraisal waiver built into the third-party financing. So basically, if it doesn't appraise and you're using any one of those types of loans, you do get your earnest money back if you cannot rework out the purchase price with the seller, which is a great feature of all those loans that just provides that extra layer of protection for the buyer. So once you get all that stuff done in terms of the lender, the title, appraisal, survey, all those things are in place. We're maybe a week or so out from closing. You're going to start the process of transferring your utilities. With EXP, we actually have a concierge service that will contact you and help set up all those utilities on your behalf at no charge. It's a great service that we can offer that makes that process and moving just a lot simpler and a lot easier, so you don't have to worry about that, whether it be electric, water, sewage, all those different utilities that you may be needing, they will help set that up. Typically the cost, or the things that you will have to set up though, would be your electricity, your water, if you're part of a community that has sewage or city sewer, trash, internet, and those are probably the 5. I may be forgetting one, but those are the big ones that you'll want to have in place for when you get to your new home. Another thing that you're going to have to make sure you have is insurance. Your home insurance is going to be required by the lender. They will typically request that a week or so before closing, just so they have the policy on hand, because they do pay it out of your escrow money that is taken out of your closing costs and whatnot. That money, they do pay it on the front side, so you have coverage for the first year. Lots of great local insurance contacts that will get you the best prices for sure, which is really valuable, in a time where everything is going up. I've got some guys that will really take care of you in that regard. So you'll have your utilities and insurance that you'll want to set up before closing, just because you don't want to get there, not have power, not have anything, and then be scrambling while moving, trying to get all that stuff set up as well. So doing it before closing is really, really important. So the final part that you've got to do is go to the title company, sign the paperwork, give them the money, for your closing costs, your down payment, all that stuff. And then you get to take the keys to your brand new home. This is obviously the exciting part, where it's kind of a crescendo to that point where you're building up all this excitement and energy, and then you get to move in. There sometimes can be, a holdover from when the bank funds the loan. So let's say you close late on a Friday It may not actually fund until Monday in some cases, so you may lose that weekend, but typically we can work stuff out with the seller on that side to make sure that you can maybe get in and not be stuck out in the cold waiting for other things to happen. But typically, you're just a few hours away from that point when you sign to where you get the keys and the house becomes yours. So during the due diligence period, we often have our inspections done. You'll hire a certified inspector. I've got lots of contacts that I can give you. They will be able to come check the house out very, very thoroughly to ensure there are no big issues, whether it be the roof, electrical, plumbing, foundation, things like that. If there's something specific that does pop up, we'll typically get a secondary opinion from a roofer, a foundation specialist, and that kind of thing. So we want to make sure that during that window of time, we get all the answers that we need on the property to make sure that it's in the condition that we expect it to be. So I hope this video was helpful in terms of understanding the process in buying a home. Make sure, if you haven't already, that you like the video, you subscribe to the channel and get alerts also to when we put out new videos. We're going to continue to put out a few a week and just continue to let you know what the real estate market process looks like, what the real estate market in Tyler in East Texas looks like. We hope that you find this valuable. If you do have any questions, don't hesitate to shoot me an email or a text message, give me a call, whatever easiest. We'd love to help you in that process. Again, thanks for tuning in to Living in Tyler, Texas with Tyler Martin. I appreciate it.